Hi, Omri. Welcome and thanks for joining me here at Entrée Capital's Founder Spotlight series, where we highlight some of the inspiring founders in our portfolio and invite them to share some of the lessons that they've learned along the way. Are you ready to get started?
I am ready, Faye. So happy to be here.
Amazing. Awesome. So let's, start with the basics. Can you tell us a little bit about who you are as a person before we jump into your company?
Yeah, absolutely. So I grew up in Israel in a small town called Yavne. And I've always been a tech geek. I was into video games. I was into programming from a very young age, kind of programming on DOS and then on Windows 3.11, Visual Basic. And I've always been the most intense geek that I knew. And that has been with me my entire life. So after school, I went to 8200. After 8200, I went to Technion to study electrical engineering and physics. And I honestly love that stuff to this day. I love statistics. I love probability. I love inverting matrices and figure out equations and models. And I think that's kind of who I am at my core. I'm an engineer slash scientist. I think is my bread and butter.
And how does that connect to what you do today? Does it connect to what you do today? Has that impacted your company? Can you tell me a little bit about, what your company is and maybe a little bit of that connection between your passions and what you're doing?
For sure. I think actually it connects in a very roundabout way because when as an engineer, I like to think of coming up with simple solutions, coming up with solutions that are streamlined, coming up with the right structure that's not too complex, but that can achieve the job. And this may come as a surprise, but in my role today as COO, the main thing that I look after is the company culture, how we execute, how we decide on goals, how we align so that we work towards the same goals, how we communicate with each other. And I found that having that kind of engineering mindset, to me, has been even more useful in trying to kind of organize a group of people. It's been even more useful than it has been in kind of solving a math problem or kind of a technical engineering problem. So it's funny. I would say that today I take those things and kind of put them into just kind of management philosophy and try to come up with good systems.
And so what is the company that you're the co-founder of Obligo? Tell me a little bit about what that is, and obviously it seems you've got a great team that you're managing and leading, and obviously the company of your culture is great. I'd like to know more about the company. Tell me more about what
Yeah.
you guys do.
So the company is called Obligo, and it's a financial technology company. And what we do, basically, we're trying to build trust between landlords and renters using financial technology. As you guys probably know from your personal experience, whoever's listening, the relationship between landlords and renters is a relationship of fear and loathing a little bit. These guys are locked in an internal prisoner's dilemma where each party seems to have all the incentives to try to take advantage of the other party. That leads to a lot of mistrust and a lot of also economic inefficiency. And I think if you look at some of the greatest revolutions that have happened in the digital age and in the internet age, it's revolutions that had to do with the introduction of a trusted third party, usually some kind of cloud internet-based trusted third party. So when we look, for instance, at the transformation between Craigslist and Airbnb, right? Before you were looking for apartments on Craigslist, you would get the apartment, they would carve out your kidney at night, and then you would wake up with some kind of a note next to your bed. That was pre-Airbnb. And now we have Airbnb.
Or you wouldn't wake up.
Or you wouldn't wake up at all. Yeah. And now we have Airbnb, and Airbnb, they're taking a fee. And sure, they have a nicer UI, obviously, than Craigslist, but never mind the UI, they bring trust into that equation. And now if I'm staying at someone's house, I know that can be trusted because Airbnb is there to make sure everything's going to be okay. And if someone is staying at my house, I know that Airbnb is checking them, and I know that Airbnb is going to cover me for damages or anything that happens. And so the introduction of that trusted third party just opened up that market from all of the different market failures that were preventing that market from being tapped. Something similar was going on with like Uber and ride sharing, right? It was fully possible to hitch a ride with some dude and pay them cash and for all of us to be transported that way. But there was very little trust in that kind of system. And I think Uber did kind of something very similar, where yes, there's a nice GUI, yes, there's GPS tracking, there's all those fancy things, but at the end of the day, they introduce trust into that system, and now the driver can trust that if the passenger throws up in the back of their car, which may or may not have not have seen happen a couple of times here in New York City, they know that Uber is there to kind of pick up the tab, and vice versa. The passenger knows that Uber has vetted the driver, etc. So this is really. Mm-hmm.
No, I was just going to say, I never really thought of it as all of these additional or this growth in technology offerings as being an opportunity of trust. And I think that's a fascinating way. And it really makes the connection between all of these different verticals, right? We have the finance, we have the in the case of Uber, we have the transportation, we have the housing. It's really the underlying factor is trust. And I think that's the first time I've ever heard that. And that makes so much sense. And it's brilliant. Did you start in that space of trust? Were you thinking, when you're beginning, did you say, I want to build something that's the Uber of this or the Airbnb of this? Tell me a little bit about that beginning. How did you get to your idea? How was it?
It is a funny question, because I do actually have a Google document from, I believe, 2013 about this idea. I have a whole, drive folder with like a gajillion ideas. Some of them are more developed than others, but actually the idea for Obligo is in writing from circa 2013, and it starts with a sentence about how hard it is to establish trust between renters and landlords. So that's always
experience?
Been.
You have trauma, when you're renting in New York.
I've had trauma both ways. I had trauma renting in New York from a shady landlord who asked me for all these details, and everything was happening like on paper, and I would meet him like under the building, and it wasn't clear that he was even the landlord, and I had to pay everything kind of in cash up front, and everything was kind of shady. And he wanted my ID, but he wouldn't share his ID, and I didn't know what his full name was, and I didn't sign any contract. That was my experience renting in New York. About 7 years ago, I had an internship here with Google at the time, and had a kind of shady rental experience. Everything was full of rats and roaches. Had a great time. But I also had that same experience as a landlord, because I happened to own a single family home in Pittsburgh, which there was some kind of, how should I call this? There was kind of a movement in Israel after 2008. A lot of people were kind of snatching out houses from the U.S. housing market, which had just collapsed, and a lot of houses kind of made their way to Israelis who thought that they were getting a great deal. And I mistakenly thought that I was getting some kind of great deal. Never once it has occurred to me, why is this deal on my table when I'm a student and not. But so those things happened, and I got a house. And what I saw is that every single renter that I had ended up breaking the lease after 6 months, and then there's a ton of damages, and then you've got to clean up the place, and then you've got to find a new renter, and then you're paying the broker's fee, and you're paying a new lease fee for the management company, and then you finally get the renter in. They pay the first month of rent, they pay the second month, third month they don't pay, fourth month they don't pay, fifth month they don't pay. You go to evictions, you evict the renter, and you start all over again. So I saw, maybe for the first time, that the problem of kind of bad apple renters is just as real as the problem as the slumlord. And so this is very much a bilateral party. The landlords have good reason to be suspicious and careful, and for them to think that the renter is trying to take advantage of them. They've been burnt before. I've been burnt also as a landlord. And yeah, that's part of what led to wanting to solve that trust problem.
And right now, obviously there's 2008 with the housing crisis, and now there's also a very big kind of upheaval when it comes to the housing opportunities or shifts, right? When we see everyone moving out of cities in the beginning of COVID, now having to make it back, and then in New York, the laws of everyone having to, whether they needed to pay their rent or didn't pay their rent. It seems like you're really in the exact right place now. Also, as an opportunity for your product, it seems like it would have been really, or it is really perfect for this market. Can you tell me a little bit though about how you got here? What was the journey of finding this product market fit, which seems very perfect at this day and age, and it makes so much sense as you're explaining it to me. But obviously it must have been some sort of journey of you figuring it out and maybe changing things. Are there things that you might have had to shift from your experience in 2008, as it is to now and today? Has the market changed? Have you had to change your product in order to fit it? Tell me a little bit about that process and experience.
Absolutely. So in the very, very, very early days, when me and my older brother Roey, who's the CEO and my co-founder, when we were discussing the idea, we started with a very high and mighty. We're going to build the Airbnb of everything, the full rental experience, everything under the sun is going to be under what we do, on our path to solve that problem of trust. And we very quickly realized that we were very immature in those days, but we very quickly realized that that's not going to happen. There's a market, there's different solutions out there, there's infinitely many segments, and each of them need a slightly different solution. And so we had to focus our product offering. The vision for building trust is still very grand, but the product had to get a lot more, both the product and the market had to get a lot more accurate for us to be able to really do something. And so from trying to solve everything under the sun, we actually arrived at a product which kind of lies at the heart of the trust issue, and that has to do with the security deposit. So the renters need to pay a security deposit to the landlord, which returns it at the end. And we found that there's a lot of pain that has to do with that security deposit, not just on the renter side, but perhaps more surprisingly on the landlord side. So the landlords, they have to comply with a whole bunch of regulations. They gotta accept that security deposit usually in a cashier's check form, so they can't accept it electronically. They gotta deposit it into an escrow bank account. It has to be a separate account for every renter. The renters need to get interest. When you open an account for a renter, you need a W-8 or W-9 form. When you pay the interest every year, you got to give them a 1099 form so that they can pay interest for the 5 cents of interest that they made. When you want to return the deposit, you got to send it by check to their forward address. But of course, you have no idea where they moved to, and they're not picking up the phone. So now you have the money in your bank and you're violating the law, but you don't know where they are. So now you got to transfer the deposit to a government trustee. And it is sheer madness what's going on with security deposit. Very painful for the landlord. And so we thought that we had hit an interesting value proposition where we can make life a lot easier for the renter, and we can make life a lot easier to the landlord if we kind of remove that problem. And the best way that we found to kind of eliminate the problem of the security deposit is to really take after the example of hotels. When you do a hotel check-in, you don't give them a deposit, you just give them a credit card, they swipe it, and from that moment on, the hotel is pre-authorized to charge you. And that's the model that we're trying to replicate. We want to make the rental process as simple as the hotel check-in, hotel check-out kind of process. And so that was the main product offering that we first went with.
Is your main customer big rental buildings, individual landlords? I'm interested in how that works.
Yeah, so we sell on a B2B2C model. We go to the landlords or property managers. Today we only go after ones that have over 200 units, and then we bring that platform to the landlord, and the landlord uses or the property manager, and they use our platform to onboard their renters and offboard their renters at the end of the lease.
Did you always have the B2B2C model, or do you initially start off as B2C and then realized B2B is the way to go if you wanted to really grow at the rate that you wanted to grow? Can you tell me? Because that's always what I see is interesting, or not always, but there's often B2C companies that realize, okay, well, really, if we really want to make it, we got to shift a little bit to be a B2B strategy. So it's always, I want to hear a little bit about that, actually.
Yeah, I mean, our initial strategy has always been B2B2C. We always thought of the landlords or the property managers as our channels to reach the renters. We always had this conception. I'm not going to call it misconception. It's a conception that I think is likely true, that to acquire on a renter by renter basis is going to be number one, more expensive, like any consumer company would be able to tell you. And also, even once you acquire the renter, for that renter to convince the landlord that the landlord doesn't need a deposit can be quite problematic. We also, just in thinking of our value proposition, if you're a 200 unit, if you're a 20,000 unit landlord, and one or two renters of yours are now deposit free because they're using the Obligo system, that only makes things harder for you as a landlord, because now you got to manage different types of renters. Some of my renters give me
Mhm.
security deposits, some of my renters give me something else. So for the landlord and property manager to see the value of the operational efficiency of being deposit free and having that hotel check-in, check-out kind of flow, they would need to buy in completely to the Obligo system. And so we think that's where our value is highest, and that's why we're going after the landlords and property managers.
It seems like you really, obviously know your stuff. Is there any advice that you've received along the way that you think helped you or inspired you to get you to where you are now?
There's a bunch of good advice that I've received over the years. I think one advice that I can definitely say is to hire slow. And while people say that all the time, and a lot of founders think that they internalize it, it's always incredible to see just what impact it makes when you have a proper hiring standard. And today, I think at Obligo is our pride and joy. We do, live assignments to each one of our candidates. We do multiple culture interviews to test for culture fit. We have a pretty robust kind of reference checking guide where we don't just chit chat, but we actually try to get to the, to the bottom of the person. And I think that has paid dividends greatly. And it's never premature to think about your hiring standard. If you're hiring your first person, that is actually the most impactful person that you're going to hire, you better be sure that you're checking references, that you're testing live assignments, have them write an article in front of you, have them do some Excel work in front of you, and just don't make any compromises. Just don't make any compromises. It sounds trivial. Everyone says that, but the joy of working with a strong team is something that you will. It's just the most impactful and most important thing that you can do. And when you have a great team, it attracts great talent as well. And so just go full in on being very, very strict about your hiring.
Do you have any advice that you would pass on to founders aside from that? Founders specifically in their getting started ages, right? So like you went from having this personal experience of the trouble with landlords and being a landlord to being able to found a company that would solve that problem. Do you have any advice for other founders, either that see a problem and want to solve it, or have a solution and want to find the problem, about how to get to actually starting a startup?
I actually do have some advice for that. It's funny you ask, which I didn't think about before our interview. We all know, some of us know, some of the listeners may know the concept of product market fit, right? You can imagine some kind of table and you have different markets, right, at the top, and you have different products or variations of your products, right? And you would say, where is, for each product, what market does it fit best? Each market, what product would fit it best? And within that matrix, what's the, what's kind of the angle, where am I going to insert myself to provide the most value, where there's the most market, where there's the least competition, right? That's an exercise a lot of us are pretty familiar with. I am a big believer in something that I don't know if it's been discussed before me. I think that I thought of it, but it's the concept of a founder idea fit or co-founder idea fit. No, I definitely did not invent that. That's a pretty well-known thing. But what I mean in this context is a lot of founders before their kind of first fundraising or before their first company, a lot of them start with an idea and they think, well, this is the idea. And now I'm going to look for people who are going to join me and to execute on my idea. And I think that's similar to a founder saying, okay, I know exactly what the product is. Doesn't matter product market fit. There's no variations to the product. There's no variations to the market. My product is perfect. My product is going to encapsulate the entire market. And I don't really need to think about how to tweak that or to open up to new markets or things like that. I think you should basically give up on executing on your own idea. That's the advice I would give. Just forget about your idea for a second. Try to think maybe of a list of interesting ideas that you're bringing to the table, and then meet different potential co-founders who, if they're smart, intelligent, creative people, they're going to have their own ideas. And when you meet that co-founder and you have your ideas and they have their ideas, you might stumble upon an idea by one of you, or maybe something you're going to come up with together that's going to be a great fit for the both of you, or the three of you, or the four of you. And that's the idea you should move forward to. If you're committing too early to an idea, you're blocking yourself from finding the right co-founders. So that's the advice I would give. I know you're in love with your idea, but maybe try to think a little bit more broadly. Try to come up with 3 different ideas, not one, and then meet potential co-founders and listen to their ideas. Maybe their ideas are a better fit for the both of you as a team.
And how do investors fit into that puzzle? Could you tell me a little bit about your relationship once you had your idea, you had your co-founder, or you had your co-founder, then you came up with your idea and you had the problem that you really felt needed to be solved, and then you went to investors. Can you tell me a little bit about that? What does it look like between founders and investors? And then also a little bit specifically about why Entrée? Why are you here with us?
Yeah. So Roey, my older brother, and I, as I mentioned, I actually had undergone that process of kind of I mentioned before, I had a drive folder full of 1,000 ideas. I was doing kind of co-founder dating, if you will, for a while to try and see, who I would want to start a company with, essentially, because I did know for sure that I want to start a company. And of course, the perfect co-founder was right under my nose, my older brother, who has a real estate background. And when we discussed the idea for Obligo, sparks started flying, and that's when we started working on it. And then on the first year and a half of working together, we were just working on fundraising. It actually took a long time. Both of us were, well, my brother is a very experienced entrepreneur, but not in technology. And so we were first-time founders in the technology space. We're also brothers. Some investors don't particularly like that. Some investors don't mind. And we knew nothing about fundraising. And I think it's really, it's kind of silly, but it's very hard to take those concepts, right? I mentioned there's a product market fit kind of matrix. There's an idea founder fit, right? There's also a startup VC fit, right? Some VCs, and as a first-time founder, you're not aware of this, but the VC has a certain strategy. They're going after certain verticals. They invest certain check sizes, right? And not just the different, not just each VC, but each partner within the VC, they have different flavors of industries that they specialize in. And so sometimes you're going into, when you know nothing about fundraising, you're going into that situation, you're just pitching the idea, and you think if the idea is good enough, then they want to invest money. But really what they're thinking in their minds is this a fit to my strategy? Is this an area that I'm familiar with, that I am confident making an investment in? Is the check size that they're asking in line with the strategy of this fund? Because we're writing checks between $5 and $10 million. So back in those days, we had no idea. Even when we met Entrée, we had no idea that we were a great fit for Entrée. Entrée knew right away. So Aviel knew right away. That it's a fintech, SaaS-based, that he saw the size of the opportunity. I think their investment to a large degree was based on just where they felt that the market was going, and having, I believe, some trust in the founders. And I don't even think that the idea at the time mattered that much, because when you're in a pre-seed stage, the idea is so, immature that it's going to change 1,000 times. But if you're in a good market and there's a big opportunity and the founders are half intelligent, then maybe there's a chance that this would work. And I feel that that's part of why Entrée has been incredibly successful as a fund, is because they just look at those first principles, and they don't, they go to the correct level of details to make like a macro-based decision, and they don't necessarily need to figure out every detail of the product and things like that.
And you as a founder, or you and your brother, you obviously, it's also a founder's market. You have your pick of which VCs to
not at that
partner
time.
with. So
not at that time. Not at that time.
Interesting.
Not at any time. I think people are kind of exaggerating the situation even today. Yes, there are some funds who stumbled upon a lot of money and are trying to invest it and don't know how. Those are usually, maybe funds that are a little bit lower tier, if you will, that are trying to invest the money any way they can. Yes, there are some segments where there is incredible bullishness, whether it's justified or not, with NFTs and crypto. where it certainly appears sometimes like founders are just raising 20 million seeds without even looking both ways. But I feel even in our most recent kind of fundraising in our Series B, I'm not going to say it was hugely difficult, but I don't think that we are in a position where founders can get away with anything they want. I think you still need to prove your case. You still need to be, the investors need to trust you as a founder. And I don't think that those basics have changed. But yeah, there's more money on the market. So check sizes are bigger, valuations are bigger. That's definitely the situation right now.
And what is a book or podcast or movie recommendation that you would say, like, listen to this, watch this, read this?
Yeah. My absolute favorite book is the mother of all business and kind of self-help and kind of psychology books, which is How to Make Friends and Influence People, but by Dale Carnegie. I always go back to that book. It has I feel like that book just lies at the base of the pyramid for how to build good relationships, which would benefit your personal life and your business life. And everything else is just kind of cherries on top and variations on that theme. But that book, I feel, really is the base of that pyramid. If you've not read that book, I highly recommend it. It's all taking place kind of in the 30s, I believe. So it's pretty funny because all the examples are kind of anachronistic, which makes it for an even more interesting read.
Yeah, I think that's a good advice. I have it on my bookshelf. So if anyone listening to this wants to borrow a hard copy in English, meet me in Tel Aviv. I think this, I had really enjoyed this conversation. We're running out of time. So is there anything last that you want to close off with or end with here?
Yeah, I'm not sure exactly who's listening, but if it's to the degree that it is first-time founder, I just want to say, good luck. And then I'm always available for anyone who wants to pick my brains or get any kind of advice on fundraising or anything else. For me personally, nothing is more therapeutic than trying to help other founders if I can. Being a founder can be quite stressful, and helping other people, I think, is actually the best way to de-stress. So I am both offering that and recommending that to you if you are feeling kind of stressed under the burden of being a founder. Is just try to be helpful to other founders who are going through the same thing.
I think that's a perfect way to end. I thank you so much, Omri, for joining me here today. I really enjoyed this conversation, and we'll catch you on the flip side.
My pleasure. Thank you, Faye.